Welcome back to this Money Control live stream. Good morning. It's a Friday morning. Qs aren't looking all that great globally, but here back home, we've had a fairly good week with the Nifty gaining somewhere around 1% or so, Friday to Friday, and of course we are poised to hit those record levels of 26,277 on the Nifty as well. Came very close to that yesterday, just 30 odd points away from that level, but we ended below that 26,200 mark. But today, despite the fact that we are looking at dismal global cues, the GIFT Nifty had paired some of those opening losses. It was trading mildly in the red. But let's see whether or not the bulls can defy all that and make a dash at that 26,277 mark today. We've been outperforming global markets in the last week or so, in recent times, so to say. And if that outperformance continues today as well, and if we focus more on domestic cues, who knows, we may be clocking in that level today itself. Lots to chat about today. We'll be getting you a big market voice, a big global market voice later on in the show as well, to understand all the concerns around AI bubble, because Wall Street overnight started on a very strong note. We saw Nvidia rallying 4%, 5%, but then there was a stunning reversal that not just pulled down AI stocks, but even Wall Street, Dow, Nasdaq, all of them plunged, took a sharp turn and actually plunged in trade. So that really, that really puts the focus on concerns around AI bubble, because Nvidia looked like it had calmed frayed nerves, but not really. Perhaps there's a deeper issue at play. But there were some data also that came out yesterday in terms of jobs data, so to say. Unemployment rate inching up, but more jobs added than was expected. So mixed data, but that has kind of quashed hopes of a rate cut in December. Perhaps that's another reason that Wall Street sold off last night. But lots to watch out for. All your stock related queries will be in focus. Send them in to us on a live feed. We'll get our experts to answer them. And we'll also touch upon stocks like TCS that will be in focus on the back of news flow. But before all that, quickly take a look at the top stories at this hour. Wall Street indices end sharply lower after a dramatic sell-off in artificial intelligence names. Nasdaq and S&P 500 registered the lowest close since September. The CPOE volatility index posted its highest close since April. The US economy added more jobs than anticipated in September, although the unemployment rate unexpectedly rose. Asian markets track Wall Street reversal in AI stocks and trade with cuts this morning. In fact, the Kospi was selling off over 3% last time I checked. Nikkei was also trading lower by about almost 2% or so. The GIFT Nifty indicating a lower start for our markets, and in the pre-open I can see the Nifty is down over 100 points. So looks like we are poised to start on the back foot. Crude prices slide as US pushes for a Russia-Ukraine peace deal. Meanwhile, gold prices fall as strong US jobs data dims prospects for a December rate cut. TCS partners with private equity giant TPG to pump in 18,000 crore rupees into the data center business. TPG will invest a little over 8,800 crore rupees for a minority stake. TCS will own 51% of the joint venture. And Mahindra Group targets organic growth of 15% to 40% across businesses till 2030, aims to be the world's fastest growing SUV brand and the top light commercial vehicle brand as well. So ambitious roadmap outlined by M&M. This stock will be in focus. All right, then, quickly take a look at the recap from yesterday's trading session. We did come off intraday highs. Given the fact that the broader markets were underperforming, nevertheless, both the Sensex and Nifty hit their 52-week highs. And in fact, Sensex I think topped its 2024 high, but Nifty came 30 points within its lifetime high of 26,277. Nifty Bank Index consistently hitting record levels. Yesterday as well, it had a record close. I think 59,440, that was the record high that the index clocked, very close to 60,000 levels now. Let's see whether that's in the offing in the coming days or not. The breadth of the market continues to disappoint. Once again, the breadth favored declines. But in terms of gainers, Reliance Industries and HDFC Bank were the biggest contributors to Nifty's gains. Hero MotoCorp has been upgrades pouring in for this counter. The stock hit fresh 52-week high yesterday. There was a second upgrade coming in on the stock in the last 2 days, and third, I think, this week, if I'm not mistaken. But quite a few movers were also there, the likes of Biocon that suffered from a double downgrade rather from Citi. So that stock was punished in the last two sessions. That stock has slumped over 7%. In terms of fund flows, good to see that foreign investors have been net buyers for a second straight session. But the quantum of buying was fairly meager, but no complaints there, because they looks like they are making a comeback slowly and steadily. DI net buying continues. 800 crore rupee worth of shares bought in the cash market. In terms of the put call ratio, it jumped to 1.44. That was the highest level that we've seen since the 20th of September. And two stocks will continue to be in the futures and options ban, the likes of SAIL and Sammaan Capital. Of course, Sammaan Capital has been facing the heat after that regulatory setback by Supreme Court. So that stock has been in focus as well and has shed quite a lot of weight in the last two sessions. But let's take stock of how things are poised this morning. Joining me is Raja Venkatraman, co-founder, NeoTrader. Raja, lovely chatting with you. Lovely to have you this Friday morning. It's been a good week on the headline indices front for the for this entire week. Came very close to 26,277, but the texture is not looking all that great this morning. Would you say that there could be a hurdle before we cross that 26,277, or do you think after clocking that level we'll see some resistance? How do you see things panning out here onwards?
Yeah, good morning, Nandita. Thank you for inviting me to the show. And similar to the last week, the markets are showing some hesitation on a Friday morning. And this is largely driven by the global cues. And like you said, there are going to be some hurdles. And over the last few months, we have been seeing that hurdle has been coming in different forms. Now, looking at the current market scenario, we were having some encouraging triggers from the domestic cues, which were the result season. Now, with the result season out of the way, we are now having to depend on what are the global news flows, be it the US markets or be it the geopolitical tensions. All that is going to dictate the trends for the next few weeks. So, with that being the case, we need to understand that the upward journey is not going to be a linear path. It's going to be, littered with a lot of ifs and buts. And if you see the broader indices too, the Nifty is struggling to form a new high, while Sensex has crossed its September 2024 high and formed yesterday. And Bank Nifty is, moving along as if everything is absolutely fine. So, with such kind of dichotomy which is there on the market scenario, the lower end seems to be a little caught up. And if you see the broader indices, while they are doing well, the portfolios are not performing. The stock specific action is quite intriguing, and this is causing a lot of distress. So, while on the outside, everything is looking like a new high, on the inside, people are still not, that happy or that comfortable with what is happening. So I would say that yes, the cheer is missing right now. The buzz is missing right now. And yes, while those who are trading the indices, they are definitely having a good time. But those who are into the stocks are having fits and jerks of movement. And that is what is creating confusion on the floor. So while we are receiving some support from the FI, reducing their selling and increasing their buying, DI continuously participating. Now, what we need to consider here is that the USD INR has started weakening. So that should also be brought into the notice. And all this is now pointing towards a global outlook which has to be continuously watched, because that outlook will dictate the ongoing trend. So, like you rightly said, we will be able to form a high maybe before the November expiry. I don't know, but possibility is very much on the cards. Like the US trade deal that also triggered some sentiment, but then the sentiment is not enough. We need to see some furtherance of price action. And while everyone thought yesterday that we are going to go up, yesterday in the evening as well, the GIFT Nifty crossed 26,300. But then what we are really finding now is the reality. And the reality is that we are going to open gap down. And that's going to be a big problem in the coming session. So we are going to have the gap up, gap down scenarios. So one should not, hold on a position for too long. They should keep booking profit if they see them, because that's the best way to participate in the current market scenario.
Okay, that's the way forward. And of course, as you rightly mentioned, the devil is in the details, Raja. On the face of it, things are looking hunky-dory, but not really reflecting in the portfolios. And that's evident because the broader markets haven't really participated, and the breadth, consistently in favor of declines. Of course, you touched upon Bank Nifty as well, because that's going on as if nothing is wrong. So, does that mean 60,000 could be on the cards anytime soon in the coming week? If I may take, take this, liberty to say that.
Yeah, that's very much possible because Bank Nifty, price-wise, we may feel it has, you know, gone up, but then there is more room. So that is something which, and the higher time frames of the charts are reflecting, and the way the PSU banks have just started, they are holding the fort actually for the Bank Nifty, and otherwise the other associated sectors have not really been able to contribute, and the other is the financial services. Now, if the private banks have just started
Hmm.
waking up, so now when all of these guys join the party, I'm sure that the Bank Nifty can scale 60,000 as well. That's very much a possibility.
All right. Okay, Bank Nifty scaling 60,000 is very much a possibility, but just about 2 minutes to go for the markets to open. Recommendations for this morning, Raja?
Yeah, I would retain the bullish point and I will go with a long. A buy in Cumins. We saw late session move yesterday. So a buy in Cumins at around 44.22 with a stop at 43.80 for a target towards 44.90. And the other buy is a good support which has been formed in KEI industry. So buy at around 4170 with a stop at 4130 for a target towards 4225.
Okay, Cummins, and I think the other one you said is KEI Industries. Those are the recommendations coming in from Raja. But Raja, of course, TCS will be in focus. It had mentioned earlier that it will be getting a financial partner for its data center bet, and that's what it has done. It has signed up TPG, which has agreed to invest $1 billion in the data center business along with TCS. Now, TCS and TPG, they will be putting in money, and of course there will be an element of debt as well. So TPG will be investing a little over 8,800 crore rupees, and TCS will be bringing in the rest. TCS, of course, will retain the majority share in this with 51% stake. We also had brokerage calls. Morgan Stanley has come in with a overweight call. Target price is at 3,430, and they are expecting more announcements that would provide further clarity going forward. And JP Morgan also has an overweight call here, the target price in excess of 4,000 rupees. We saw renewed momentum in technology stocks day before yesterday, earlier in the week, so to say, with 3% kind of move on the Nifty IT index. This is an under-owned sector, underperformed quite a lot. We'll come to it. I think markets have opened. We'll come to it, Raja. We'll talk about it in just a bit. Look at the first ticks. As Raja
Sure.
mentioned, it is a start in the negative. We are 90 points down on the Nifty, on the brink of violating. In fact, we've slipped below the 26,100 mark as well. The Sensex is down almost 275 points or so, and the mid cap index as of now is also moving in tandem, and it's down by 0.4%. Breadth, of course, skewed in favor of declines at the start itself. Let's see how that really pans out. The Nifty Bank Index has also taken a breather along with the texture of the market. So the Bank Nifty is almost down almost 0.4%. Let's take a look at some of the other sectors. Looks like it is an all-round weakness this morning, and that was supposed to really play out given the fact that global cues are extremely tepid, extremely dismal, not even tepid, because Korea was sliding in excess of 3%. Even Japan was under a fair bit of pressure, and GIFT Nifty itself was hinting at a negative start. So yes, all the sectors are trading in the red. And metals, metal is the top laggard this morning. Remember, dollar index had crossed that 100 level earlier. So, that's another factor that could be weighing in on metals as well. Real estate, it has been, an underperformer. It has been weakening, and today is no different. Aside of metals and real estate, you also have IT, but the fall on IT is just about 0.3%. So, all the indices barring the metal pack, are down somewhere around 0.5% or so. So it's the metal pack that is taking the lead in terms of laggards. In terms of the individual movers, then it's Hindalco that's at the top of the losers list, 3% down on this stock. You have Tata Steel as well, down 2%, JSW Steel. So all these metal counters under a bit of pressure. Shriram Finance has also come under selling pressure. Adani Ports, some other technology names like HCL Tech under pressure. Tata Consumer, ICICI Bank, Eternal, Kotak Bank. These are some of the laggards this morning. Even Bajaj Finance is among the laggards. The gainers list is pretty slim this Friday morning. M&M, in focus after its ambitious 2030 roadmap. We'll talk about that. M&M is among the top gainers, up 0.5%. Asian Paints, that was under a spot of bother yesterday, has managed to see some buying interest after yesterday's correction. NTPC, Hindustan Unilever, these are in the green, and so is TCS. We were talking about it, and I'll come to Raja on that. Ultratech Cement, Power Grid, and Nestle are some of the other gainers. Raja, we were talking about TCS, how the technology stocks have underperformed, and they're just starting to wake up once again. TCS of course has been reacting on the back of news flow. How are you looking at the large cap names now on the charts? TCS, Infosys, given the fact that they have lagged even the mid cap peers, do you see the scope of these large cap names picking up traction now, or would you say the traction will remain with the mid cap names?
Yeah, a very good question at this point, because over the last few trading sessions, the IT sector has been rearing its head, and the large caps have now slipping out of the shadows. So, which clearly says that the underlying momentum in the IT sector is pointing towards a recovery. Yes, there were many things that were contributing. So, another a sort of indirect cue could be that the if the AI, which was one of the main triggers for the IT sector actually coming down. So if the dust on the AI settles, then probably the large cap names could again resurface, because they have also reoriented towards how to tackle this AI buzz which is being created in the last few months. So with that being the case, when you consider the bigger names like say TCS, Infosys, Wipro, so these stocks are showing some traction here. And I would say that those who were looking to invest into IT maybe a couple of months ago, this should be a good time to consider, and they should start looking at participating in these names. And when you talk about TCS, with also the news flow which you mentioned, it augurs well for the prices, and I would see a rise possible towards the 3,300 levels, and of course with a lot of brokerages also coming out with that note. So I'll say that there's a lot of support being rendered to TCS. So TCS should be a good buy here.
Okay, TCS should be a good buy, but since it's Friday, I want to I want to bring your attention to a liquor stock, Radico Khaitan. This stock has been investors and traders have been saying cheers to this stock, and it is seeing good traction. I think it did clock its 52-week highs earlier this week, and it's cruising along, so to say. Is it a good time to say cheers, or do you think the risk reward isn't all that attractive after a 30-31% kind of move on a YTD basis?
No, this stock is has been bullish, and it has been steadily moving across. Yes, see, at this juncture, there will be definitely certain stocks which one will feel that can it continue its superb story. But I feel that Radico Khaitan has been performing excellently well, and every dip in the stock. So if you go shift to a lower time frame, you will see that every dip in the stock has been bought into. So if one needs to buy into the stock, then a dip level should be considered closer to the region of around 3,200 should be a good level to buy into. And the stock being a volatile in nature, even if you see from the yesterday's high, the stock has given up. So this stock will produce a volatility, and you should target 3,200 to 3,250 as a good zone to enter into the stock.
Okay. 33, 3,400 is a good zone to enter into the stock. But let's talk about M&M. That's among the gainers in a weak market today. Of course, there is a fair bit of development here in terms of what the company has really charted out for 2030. Its ambitions rather for 2030. In fact, the management is targeting an organic revenue growth of a CAGR of 15% or thereabouts, 15 to 40% actually, across businesses between FY26 to FY30, compared with about 25% over the last 5 years. Export growth will also be a key thrust area with tractors under the Oja brand, global pickup in launches in LCVs, and a new UV lineup as well. Of course, M&M has also raised its tractor volume growth outlook for FY25 to FY30 to 9%. From 7% earlier, and it expects its LCV business revenue to grow 1.6 times over the same period. Aggressive plans, brokerages have taken note of it. CLSA has come out with an outperform call, target price at 4,417. Brokerages are upbeat, and the stock, of course, has seen good traction as well. But on the charts, do you see any signs of fatigue, or would you say that there are chances of the stock moving higher from here? And if one wants to get in now, is it already too late?
Yeah, so when you take a look at Mahindra and the kind of diversification which it has in the auto industry, the stock has been able to perform quite well. After the GST calibration, the stock got more tailwind, and the stock has been performing quite well over the last 7 to 8 months. And this stock too has got good buying interest, and every dip in the stock has been a buying opportunity. The recent dip which occurred closer towards November, at the start of November, was an excellent opportunity to buy. Now the stock is showing some further upward move, and yes, if you want to participate at the current juncture, the approach should be to buy at current levels, also on dips towards the region of around 3,500, and that's the way you can look at from a investment perspective, because you are seeing a target of around 4,000 by the end of the next 3 months. So it's a good potential here, and the potential to move up is very much there. But then profit booking at this juncture is possible, but overall the bias is bullish.
Okay, overall the bias is bullish when it comes to an M&M. Okay, let's shift focus to our viewer queries. Then I want to take up some queries that are sent by first time viewers. I spotted a query from Manohar Pamula, and he has a query on telecom stocks. Which stock is looking good for long term investment? Bharti Airtel, near 52-week highs, perhaps Indus Towers also looking good. Any thoughts which one he should take a bet on?
Yeah, definitely. When you're talking about the telecom space, yes, there are many names, but I would say that Bharti has been able to withstand the storm. And if you're talking about the long term, definitely I would go with Bharti, because you can see here that over the last few months, the stock has been able to maintain its position, and here the stock has been continuously patronized, and it's got re-rated by the broking community as well. And the telecom space, it has been able to handle the competition, and the kind of performance it has been demonstrating is clearly indicating that yes, the stock is in a very strong zone. Yes, there are going to be bouts of profit booking, but the stock is poised to go much higher. So I should say that this is a good stock for investment for a long term in the telecom space.
Okay, Bharti Airtel, a good investment. Hope that answers your query. There's another query that has come in from Jairam Goda, and he wants to know your thoughts on Vishal Mega Mart. Now, the stock has come under some bit of selling pressure, I think in the last 1 month or so, and it has been trading around that 130 level, 133, 130 or so. How do you approach this stock, in the midst of this consolidation? Is it a good time to look at it right now? And if people are holding it, should they hold on to it?
Yeah, I would say that the stock post its listing, it's been almost a year now, and the stock is witnessing some profit booking here. So this would not be a good time to add into this position. And if you are having a position, you should look to exit and reconsider some other stock. So I would say there's definitely a call for exit here, because the stock is not showing any signs of recovery as yet.
Hmm. How are you looking at trend now, Raja? The stock has, of course, halved from its 52-week highs, not been such a great year for trend. How are you navigating that stock now after the kind of correction it has seen?
Yeah, the entire FMCG space has been moving in fits and jerks. And when you're talking about trend, people have, it's actually in a downtrend, you can say. So the overall stock has,
Hmm.
it fizzled out last year, and the entire dissipation in the momentum is very clearly seen. And yes, everyone is hoping to encash on the FMCG story, but unfortunately, the FMCG stocks have not been able to shows that kind of spirit which one expected, and that's the reason why we are having stocks like Trent not able to come up. So even its peers have also not been able
Hmm.
to show much traction, and that's why there is a bit of confusion here in the FMCG space. Despite the GST calibration, still the kind of momentum which you're seeing in that. So this is a space which one could track for a rebound here, just like the private banks. So once the market recovers and holds, so this could be an area where the stocks would, the entire decline could phase out, and we would be able to encash that. We will be able to enter at a very low risk zone. So yes, this should be tracked, but not participate at
Hmm.
the current juncture.
Okay, that's the call on Trent. In fact, the entire FMCG basket as well. Let's move on to the next query. Then, I got a query from Leo, and he bought First Cry or Brain Bees during its IPO. He wants to know whether he should hold it or sell it off. Of course, the stock has seen quite a bit of a correction. In fact, it is below its IPO price as well of 465. How or what should they do? Should they get out at this juncture?
Yeah, so I would just like to give a thumbnail or a thumb rule rather, which I follow when I look at the IPO stock. So especially when the stocks are trading below their IPO low, I would say that I would stay away from it. And this particular stock, since its IPO, it has not been really able to move higher. So if it moves higher, then you can participate. So those who miss the IPO, if you have taken the IPO, then the best advice would be, if you are getting a profit, book it and then wait for this queue. So if it moves above the IPO high, it's a good time to buy. If it moves below the IPO low, it's a good time to exit. So now this stock has come sufficiently below the IPO low, and it indicates more pain in store. So I would not advocate holding on to First Cry at the moment.
Okay, not advocate holding it. I hope it answers your query. There are a couple of queries on the auto ancillary space as well. I can see one from Manish Kumar on Bharat Forge. There was another one on Samvardhana Motherson on the feed somewhere. Should one stay invested or exit at these levels? And what's the view on Bharat Forge for the long term? Auto ancillary stocks have seen good traction. I think Bharat Forge has seen a good double digit move in the last month or so. Is it a good time to ride the wave for these stocks?
Yeah, definitely. Mother and Sumi is one of the most tracked and also most inquired on the discussion feeds. So yes, this stock is showing some good momentum here, and yes, it's a slow mover, but it's showing some positive traction here. And when you talk about Bharat Forge over the last few sessions have shown some spirit here. Both these stocks are getting out of the shadows, and they are showing that yes. I'm also a contender for the long side, and the momentum which is seen here is encouraging. So both these stocks are a buy on my list.
Okay, both these stocks are a buy. Hope that answers your query. I spotted a query on L&T Finance. I think this one's coming in from Naveen. This stock has had a phenomenal run, right? The stock has doubled on a year-to-date basis. One of the winners of this year. How is it
Yeah,
looking now? Close to 52-week highs of 310, 39 almost. But do you see
right.
more upside, or are there chances of some bit of fatigue setting in? How should one do, or what should one
Yeah,
do with the stock?
if you are holding the stock, then I would say that you could book some profits. But if you are looking to participate in this counter now, then it's not the right moment. Wait for some reaction here. The stock is definitely you know promoted by one of the strongest groups, and a pullback would be a good zone to buy into. So the nearest supports are only emerging at around 270 levels. So around 270, one can see what's happening and then consider buying into the stock, but not right now.
Okay, not right now. Look at buying it on dips. That's the view. The stock, of course, has been an outstanding performer, has gained 111% so far this year. But there's a query on Siemens Energy. Aisha wants to know your thoughts. Any targets here on a Siemens Energy? The stock, has done fairly okay in the last month or so. At 33.59, what should one do? And what are the short-term targets here?
Yeah, the stock is poised well, and post its listing has managed to show some good upward traction here. I would say that the stock can scale to its high of around 3600 to 3650 within the next 3 months. So it's a strong possibility. The volumes are also quite good. So I would say that it's a good stock to be in, and also a good time to enter as well.
Okay, that's the view on Siemens Energy. Hope that answers your query. There's a query on Indraprastha Medical. I'm not getting the person's name, but wants to know if it's a good time to buy. The stock has been, in a corrective phase, down somewhere around 8% or so in the last month or so. Should one utilize this dip to get into this counter?
Yeah, this stock has performed quite well. The periodic dips which has emerged in this counter is encouraging, and the pharma space, I would say, has been performing quite decently. And this counter can this, especially the health services under the pharma, has shown some good promising move. So yes, this counter dip which is emerging in the last few days should be a good opportunity to enter or re-enter.
Okay, that's the view on Indraprastha Medical. Hope that answers your query. Last couple of queries to go then. There's a query coming in from Reshmi on Motilal Oswal for a positional trade. She's bought shares at 974. Wants to know whether she should hold it or book a loss. Of course, the mood or the sentiment when it comes to capital market plays is fairly upbeat. A lot of experts I speak to are very, very bullish on this entire basket or universe, so to say. But in particular, if you look at Motilal Oswal, how would you advise her to go forward?
Yeah, when you consider the profile of the organization, the profile of the organization is strong, and the kind of reactions which you're seeing right now is the lackluster movement which you are seeing right now. But yes, the overall positioning is good, and one should hold on to this counter because this counter is poised for more upside. I would say that if it crosses the 1050 level, one should actually add more. So if you're currently holding above 1050, it will actually be moving above its recent resistance, just like in Nifty. So it would attract more buying interest, and the stock would stay much higher.
Okay, that's the view on Motilal Oswal. I hope that answers your query, but let's move on to other queries then. I spotted a query on a Maruti as well on our feed coming in from Manish Kumar. I know we discussed M&M at length, but particularly for Maruti, what's the trajectory looking like? Some of these auto stocks had come under some kind of correction after the phenomenal run they had since August when the GST changes were announced first. So, is it a buy on dip, Maruti as well, or would you prefer M&M over Maruti?
Yeah, I would prefer Maruti over M&M, but both these counters have
Okay.
been able to buck the downtrend, and also which has been the entire auto space has not really moved excellently, but some pockets have really done well. Like for example, Hero Moto over the last six trading sessions, it has done quite well. It has got re-rating, and now Maruti as well, M&M as well. But now, when you compare Hero Moto, Maruti, and M&M, I would say that Maruti is a much stronger bet because Maruti, the way it has moved over the last few sessions, we only witnessed a mild profit booking, and the story again continues. So I would say that the story in Maruti, which was there over the say you could say since the start of the year has changed. So it has moved to a new phase, and I would say that every dip in the stock is a buying opportunity. The current dip levels are a good opportunity to buy because I can see a targets of around 1650 500 possible within the next 3 months.
Okay, those are the levels to watch out for in terms of Maruti. Just one more query then, Idea Forge, Raja. I think last Friday it saw a very sharp spike of 9% or so. Ever since then we've seen some kind of correction. So there's a query coming in from Alex on Idea Forge. Would you buy it on dips?
No, I would prefer that Idea 4 has been going through some bit of consolidation right now. And I would say I would wait for some clarity for the prices to move above 550 levels before I enter the stock. Otherwise, this stock is an avoid from me right now.
Okay, avoid Idea Forge for now. That's the view. I hope that answers your query. But Raja, with that, we are timed out on this segment. Would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and it's a good thing because it reminds me that weekend is near when I speak to you because we interact every Friday. So have a great rest of the day and have a great weekend as well.
Thank you. Same to you.
Thanks a lot. With that, quickly take a check at what the market is doing. We have paired some of those opening losses. We are back above that 26,000 mark now, 26,100 mark, so to say. Around the 26,150 mark, 50-point cut on the Nifty, but the mid-cap index is near about its opening lows even now. So, that's where the pain has been actually in broader markets, and it's quite visible right now as well because the advance decline ratio is 1:2. And mind you, even at a time when the index itself is knocking at fresh highs, we saw the broader end of the markets not really participating, which is why portfolios also not looking all that great or not feeling all that great, even though the benchmarks were knocking at fresh highs. But on that note, let's bring on board our next guest for today to understand what the setup is looking like and whether it is a buy on dip market or a sell on rise market. Let me bring on board Deepan Mehta, Elixir Equities, joining in this morning. Deepan, lovely chatting with you, and first of all, I would like to thank you for agreeing to join us at such a short notice. I appreciate your taking out time for us. But tell us, the benchmark indices close to record highs. We came 30 points or 40 points, closer to the level 26,277. But portfolios not looking all that great. Broader markets not participating. Do you think we are waiting for that one big Q, the India-US trade deal? Perhaps post that you will see sentiment, picking up even when it comes to the broader end of the markets.
Good morning and thank you for having me on your show.
Trigger, I think everybody is talking about how it can come by today, tomorrow, but hopefully it should come by in November. We've been hearing about it for quite some time, and now the commentary from the US team sounds pretty, positive on that front. But we spoke about earnings. We'll talk about that in just a bit. But the other big news is the whole AI bubble, fears around the AI bubble. That's building, and Nvidia results at first glance seem to be fraying nerves, but that didn't really happen. We saw the stunning reversal in AI stocks last night. Of course we don't really have such a pure play AI theme here in India, but do you think it will come out as a positive for us because foreign investors have started buying in small amounts? So here on, for an anti-AI play, will India benefit? How are you looking at this entire news and where India is poised when it comes to all this, talk about AI?
No, I don't know. I mean, if there's the AI bubble which is bursting, then certainly India will get damaged. There'll be collateral damage, that's for sure. But from the way Nvidia's numbers have come through, I don't think that any case AI is in a bubble. I mean, Nvidia trades at 41 times its current calendar year earnings, and a 50% growth company. So PEG is less than 1. So if you assume that AI and AI led by Nvidia is in bubble, then we in India are in a super bubble because we have so many stocks with 100 PE plus and consumer stock at 50-60 PE. In fact, if Nvidia were to be listed on Indian stock markets, you would give it a 100 PE multiple and its market cap would be 2.5 times its present market cap. So I don't think that AI is in a bubble. But if I'm wrong and there is in fact a bubble and a sharp correction in global stocks because of this, then certainly India will suffer some collateral damage, maybe less than the rest of the world, but that would be a great buying opportunity.
Okay, that'll be a great buying opportunity. That's the view. You alluded to earnings season. Let's focus in on things a little more domestic now. Which sectors do you think surprised positively? Most of the cyclicals did well. If you look at the Nifty universe, but there were quite a few outperformers when it comes to the broader end of the markets. There were quite a lot of winners when it comes to the broader markets. So, what according to you stood out, and what according to you was a big miss, and you would steer clear of right now?
No, I think it was a good earnings season, and we came out of the earnings season with a lot more stock ideas than we entered it. And that's the first time in many, many quarters. If you ask me broadly, I think that entire capital goods segment reported good set of numbers, especially the renewable equipment companies, be it wind or even solar, and even their EPC players and all the connected industries. They reported exceptionally good numbers and very good growing order book position. And that's the case with a lot of other EPC players and the capital goods companies, especially electrical equipment companies, transmission companies. So the entire ecosystem around power generation, power transmission, that did very well according to us. Cement also, I think, did extremely well and very positive from that point of view as well. And to an extent, I think that even pharma certainly surprised, at least a few numbers over there were pretty decent. But in every industry, I thought that there were some companies which were bucking the trend, which were reporting good set of numbers. And, where I think that they're doing something different because of which investors should make good returns.
Okay, so those are the pockets that did well. Let's talk about banks now. Banks, of course, the Nifty Bank Index hitting fresh highs, PSU Bank Index doing well. Do you think private banks will take the lead here on? Because PSU banks have anyway been doing well and private banks have just about woken up. So which end of the spectrum would you tilt towards if one has to really go out and buy right now? Should they look at private names since they've just about started their rally?
See, I would be slightly cautious on the banking side, and the reason for that is there is intense competition within the space, and it's becoming like a complete red ocean. I don't know whether long term such net interest margins are sustainable or not. And now we are observing that even the competition is increasing from the public sector banks who were kind of dormant because of their balance sheet challenges, but now they have cleaned up the balance sheet, they have increased their capital adequacy, worked on the technology platform, and they have a superb network of branches and loyal set of customers as well. So we are seeing a lot of competition for the erstwhile private sector banks, which have delivered exceptional returns in the last 2-3 decades or so. So my strategy would be to be almost nil or extremely underweight the private banks, be it ICICI, HDFC, Kotak, IndusInd, and focus more on the PSU banks, especially mid-tier PSU banks. I think there's good value over there. And the best way to play it would be through the NBFCs, like say Bajaj Finance. Also, having said that, we and our clients may have a vested position in all these companies.
Okay. Best way to play it is via the NBFCs, the financial space. But let's also talk about the auto space. We've seen GST-led up move here, but since then we've seen some bit of profit taking as well, at least in recent times. Do you think all the good news is already in the price, or do you think it's just about a profit taking and we could see renewed momentum in auto stocks going forward? How are you looking at the numbers that came out, and what is the future trajectory looking like?
No, I think pretty decent set of numbers coming through from the auto industry, and I think the better numbers would come through for the December quarter as well, because that's when the sales have really picked up. The festive season sales will get captured in the December quarter. So very positive on auto per se, and I think that the outliers will do even better. Sales like an M&M, which came with a very good set of numbers, or a TVS Motor or Eicher Motors. I think they all should do very well. Hero MotoCorp also surprised us on the positive side, but before getting more conviction on Hero Motor, we would like to see improvement in monthly sales figures and also consistency when it comes to quarterly numbers. But by and large, auto is a sector, especially, and even auto ancillary for that matter, are two sectors investors should be overweight on.
Okay, autos and auto ancillaries one should be overweight on, but Hero Motors, since you mentioned, it has got a spate of upgrades in recent times. So yes, Street seems to be fairly bullish on that stock. But what about your thoughts on the recent listings? Most of them have been from the consumer tech space. There's been a lot that's been spoken about in terms of valuations of these IPOs. Where do you stand? How do you really value it? because they aren't really looking at PE, PB. They are looking at price to sales. They are looking at PEG. So, where do you stand when it comes to the valuations of some of these recent listings and recent IPOs that we have seen?
See, I think that certainly IPOs are being priced slightly aggressively even when you compare to existing listed companies, but that's nothing new. And the interesting part is that most investors are getting a good exit on listing as well. I was quite surprised that even IPOs I thought were expensive on listing, they were giving 15 to 25% type of a pop immediately. So that is drawing more and more investors who are professional IPO investors, and that's driving the IPO boom. But I think that the better way to play would be 6 to 12 months down the line. Once you have a better understanding of the companies, their strategies, and seeing what the quarterly numbers have come post listing, because we are seeing a lot of disappointments on quarterly numbers post listing. So, strategy is just wait and watch. If you're an IPO professional investor, continue doing that activity, is giving good returns. But from a new investment perspective, I would say wait for 6 to 12 months.
Okay, wait for 6 to 12 months. That's the call. Wait for earnings to come out, and of course things to settle down. But what about the export-related themes? Now that India-US trade deal is back in focus, do you think it's time to relook at some of the themes like textiles, chemicals, for that matter, because they've already seen quite a lot of correction?
And you could look at it, but let's just wait for the deal to come. I think it's been supposed to come for a long, long time, but it's not come. And once bitten, twice shy, because we thought many months ago that we would have a fantastic trade deal with US, and we ended up at 50% tariffs. So let us see whether it is 15%, 25%, 30%. Who knows what the actual number is? And there's no point trying to pip this thing, because if you do have a nice trade agreement, then you will see a nice long-term growth trajectory for a lot of export-oriented businesses, and there'll be enough opportunities to buy them after all this uncertainty is over.
Sure. So, what would be a nice deal according to you, Deepan? Street chatter is 15 to 20%. Do you think that's fairly optimistic, or do you think that's a fair expectation?
I've also heard these figures of 15 to 20%, but it's anybody's guess. These events are very difficult to predict, and I'm not in that room with them to understand which way the kind of negotiation is flowing. So let's just wait and watch. See, India is a very big
Sure.
market. There are so many different diverse sectors. If export doesn't work out, domestic will work out. If domestic doesn't work out, there are platform companies, there's pharma, there's auto, there's retail, there's jewelry, real estate. There's so much of choice for investors that if one doesn't work, then there are other sectors to kind of pip in.
Sure. Sure. Point taken. Deepan, last couple of questions. Then, what are your thoughts on IT services? It's been a rank underperformer. Last week, earlier this week rather, we saw IT, rearing its head once again. This week, it's by far the biggest sectoral mover. Do you see the fact that this sector is a bit under-owned? Do you think interest will come back on a valuation with a valuation perspective, or do you think things are looking a little iffy right now as well, and it's better to wait it out? What are your thoughts?
Short-term positive, long-term negative. And I think a trade deal with US may cause these stocks to move higher. There could be a good trading rally in IT services companies. They have been underperforming and they are under-owned. There could be short positions as well. And maybe you could have 2, 3 good quarters because of base effect as well. And investors have to price that in. So definitely there's a trading opportunity in software services companies. But on a longer term basis, I'm increasingly cautious. So if you have a trader mentality, then go long over there. But from an investor's perspective, you have to look for exit options. I've been tracking the industry for more than 30 years. And this particular time is one tech wave which the IT services companies have completely missed. Like right from Y2K to internet to cloud services, so on and so forth. All of them have given a big boost to IT revenues. But AI and related technologies have just not made an impact on IT revenues, and that's quite surprising.
That's true. We were talking about consumer tech, but the players like Zomato, Nykaa, Paytm, Do they, warrant a look right now? Because Eternal has come off, it has been witnessing some bit of profit taking. Do they offer good entry points now? Obviously, not talking about specific stocks, but some of these ones that have listed some time back.
See, basically, these platform companies or consumer tech or whatever you may call them, they are the businesses of the future. Like if you want to plan a portfolio for the decade starting 2030, then these are the companies which will come into focus. Eventually, they'll find themselves into the Nifty and the Sensex as well. But right now, it is not clear which are the winners over here. So investors need to, kind of have a small holdings in these companies, buy them maybe as a basket, try to understand them better, and then depending on which company is really, outperforming, beating expectations, they could start to kind of increase weightage over there. But one cannot ignore them. These are businesses of the future. And at some point of time, they'll be really large companies, highly profitable. So if you shouldn't miss out on such long-term trends as well. So I would say that right now it's difficult to understand and value them, but you should not ignore them at least.
Okay, you can't really afford to ignore these platform companies. Of course, we may have missed the AI buzz, so to say, but in consumer tech at least, India has taken the lead. Lastly, Deepan, for retail audiences, if I were to ask you to pinpoint 3 sectors to look at tactically, which one would be, which ones would those be, and what's your pecking order?
No, I think that we like to work on a bottom-up basis, and I think across the board all sectors look good. And eventually, when we have a US trade deal, even export-oriented businesses should do well. So I think a lot of sectors and investment themes are in play. There's nothing which is off the table, but I think better to do a bottom-up approach and look for companies which are still available at reasonable valuations.
Got your point, Deepan. With that, I would like to thank you for taking out time and joining in this morning. Appreciate your taking out time. I wish to interact with you again sometime in future. Have a good day and a great weekend, and I'll see you soon.
Thank you, and same to you.
Thanks a lot. Well, with that, let's take a look at what the markets are doing. We are above the 26,100 mark, but it's an 80-point cut. Not too much when you compare it to compared with what global markets are doing this morning. We are outperforming global markets today as well. That's been the case the last of the whole week, so to say. But record peak or record highs of 26,277 proving to be evasive or elusive rather for us this morning. But let's see how things pan out. We still have a few hours to go. For the day and the week to end. So who knows if we can make a comeback and make a dash at that record high level of 26,277 on the Nifty or not. But the breadth of the market is not looking encouraging at all. In fact, it's quite poor, so to say. 1:3, that's the NSE advance decline ratio. 718 advances to 1960 decline. So, broader markets are sulking, they are not participating. Even on days when headline indices were making a dash at all-time highs, we had the broader markets not really participating, and that's of course has been a cause of concern. We are sub 26,100 level as we speak, but we will take stock of how things pan out at 3 p.m. on closing bell. So don't forget to tune in then as well. But for now, it's a goodbye from me and the entire team that put the show together. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates, and we'll see you again soon. Thank you for watching.